Today, I'm joined by Arthur Hayes, co founder of BitMEX, CIO of Maelstrom, and now the man leading Flop Labs. We're going to be testing his latest market thesis, ask whether Bitcoin has actually bottomed, look for the next major crypto narrative, and then unpack Flop in the attempt to build a native economy for AI agents. Arthur, welcome.
Thanks for having me.
Dude, this is like we were just saying before we started recording. It is very serendipitous timing. We weren't able to have our interview as scheduled yesterday, but honestly, this is working out so much better because in the last 24 hours, Bitcoin is now, the script is now changed, which is wild. What are your first reactions just based off of what's happened because it's right now, August 20th in Japan time, but in America, it's still the
Well,
19th. But
I'm in Singapore, so yeah,
oh, you are. Okay, wonderful. So
yeah.
we're not that far away. That's great. Okay. So now with Bitcoin moving above $69,000, now not roughly half its 2025 high, it's actually moved up quite a bit. Leverage just got a massive flush and volatility has just gone through the roof. So even though we have a 1-day pump, which I'm always skeptical of, do you believe that we are right now in accumulation, distribution, or are we waiting for the next forced move?
So I think obviously been coiling the spring of Bitcoin. Volatility has fallen to cycle lows. It's boring. It's August. Everyone's on vacation, the beach, whatever, right? I guess you guys in Japan are getting flooded in the Chiba station or whatever, the typhoons.
Yeah.
So it's that period where nothing's happening, and then and then all of a sudden it all clicks together. So I wake up, for the past few days, one of my best friends, he's a TradFi bond hedge fund bro, right? And no, he's into crypto, whatever, but like he's the most cynical crypto person I've ever. We wouldn't call him a crypto person, but like he doesn't believe in anything of the ethos of crypto, but he trades it, right? It's another asset. It responds to different levers. And out of the blue, he's like to me a few days ago, he's like, "Yeah, I think it's time for Bitcoin." The debt sustainability thing, the rhetoric around it is picking up the fear that the US is fucked up. It's $40 trillion in debt. The interest costs are too high. The back end of the yield curve is, getting out of hand. And this is before what happened last night. I'm like, oh, interesting. This is an interesting tell that my friend who's like pretty seriously in the TradFi camp is like, okay, it's time to strap on some Bitcoin risk because this narrative is building in the circles that he traffics in, right? Like, he goes to the IMF meetings and, treasury secretaries call him up to understand what the fuck he thinks about bond markets. So like he's pretty plugged into how hedge fund TradFi bros think about the market. So that's an interesting tell. And then overnight, you get this news that Besant upsized the buybacks for the long end of the curve. I forgot the amount. And this is what set off the rally. And, as we're talking now, Bitcoin's at 69,000, ETH's up like
Mm.
15, 16%. A bunch of other assets are pumping as well. And it's basically this realization. And it started with the Japan intervention a few weeks ago by the US and the Ministry of
Oh,
Finance in Japan, and now it's this buyback upsize. People are like, oh shit, they know they're fucked. They've got to start printing the money, conducting yield curve control. And the purest way to play yield curve control with the fiat currency is Bitcoin. It is the reason why we are here. It's for this exact setup. And so this is why the move was violent. People were very offsides, sleepy time in Bitcoin, no volatility, whatever. And now we're going to get the follow through as the market digests what Besson just did. And this is not that much, actually, not a big deal in like in an absolute terms. But what does it signal in terms of the future direction of monetary policy for the United States?
so okay, I have a follow-up question because you're more knowledgeable about this stuff than I am. I pay a lot of attention to price action charts and things like that, but when it comes to the bond yield curve and all the fun stuff that they're talking about, I'm like, haha, it's fun. My mind just goes to a different channel. I'm like, what? What are we talking about?
Yeah.
Um, so looking at charts, looking at like S&P futures, it's like barely moved at all. Looking at the DXY, yes, it's dropped a bit. in my experience charting, which isn't that long, admittedly, as many other, expert analysts, like when I see that, I'm thinking, well, shouldn't the S&P also be falling? Like, why does it feel like everything is just focused on Bitcoin? You hinted at that in your answer, but I'm still looking at this, like scratching my head going, so in a 1 day move, we see BTC move up like 9-10%, Ethereum up 20%, all because of the yield buyback, that's the only sole reason why? Like, it just feels a little bit weird.
Well, it's market positioning, right? Bitcoin's down 50% from the highs, right? And the if you take a look at the history of the price action, Bitcoin essentially follows the American and Chinese monetary policy. Literally, that's in my this is my thesis, and if you read my writings, it's pretty much all I talk about, right? A little bit of Bank of Japan, sprinkled in there, but this is what it was created for. Genesis block in January 2009. What happened then? The U.S. defaulted on its obligation to maintain a sound currency by bailing out the banks and making the poor people lose their houses. Right. That is what happened, and we have Bitcoin as a result, best performing asset in human history that has digested the trillions of dollars, trillions of units of fiat, quadrillions of yen that have been printed since 2009. Some of that goes into crypto. It's the purest reflection of that. And so when we're going to talk about the most important central bank of the empire that rules the world is going to move towards BOJ style yield curve control, whether explicitly or implicitly. Right now, we're in the implicit phase. And the market realizes that, like, oh shit, okay, now it's on. Everything that we've been talking about, oh, yield curve control means $1 million Bitcoin. I've said that fucking 5,000 times, right? And I fucking mean it. But we had to see the yield curve control first. Now we're seeing it. Take a look at the 10-year yield. It ain't getting above 5%. Anytime it gets close and it looks like it's trending to that 5% mark, the authorities come out with a new program. Yellen did bills versus bonds. Besant's doing buybacks. If the Japanese are threatening to sell their treasuries, he's going to use a FEMA repo facility. This is what they're telling us. They're telling us very clearly that you are not allowed to sell US treasuries. And if you do, we're going to come up with some sort of funky monetary printing program to make sure that the sanctity of the US treasury market remains there. The government will be able to borrow all it needs to do what it wants to do at an affordable price. Everyone else can get fucked. That's what they're telling you. And so I want my Bitcoin. I want my gold, right? I want these types of assets in this scenario. Do I really want an S&P 500 stock? Yeah, sure. I'm sure it'll go up over time, but it's not going to be the explosive asset because they're trying to protect that market as well. So I think this is what we're here for. This is the moment. August of the summer. It's kind of quiet. All of a sudden, bond markets are shit in the bed. Besant comes out with upsizing buybacks out of nowhere, right? Like what happened in the market that why today versus tomorrow versus the next? I don't know, but it was today. And now all these things that we've been afraid of in terms of the debt sustainability come to front of mind. And it's like, oh shit, 5% is the level. He's defended it over and over and over again. What are they going to do next? Because obviously this is not going to fix the problem. Okay, yields went down, I don't know,
Yeah.
460s, whatever. I'm sure it'll rally a bit. But like, this is not the solution. They got to go all the way, straight to the BOJ, straight to how Japan did it. And those are the consequences.
Okay. So I'm not really big on a 1 day move. I don't think that there's a lot of confidence in a 1 day pump, mainly because I think the number that I saw is like there's 1.4 billion liquidations on today's move, the last 24 hours
Right.
in shorts. So we saw something similar, although it was manipulative in nature on October 10th, 2025. That day I was like I want to say 2.5 billion in longs that were liquidated on that 1 day dump. Um, Now, at that time, the market was heading up towards the top, right? It made sense. I feel like, well, I wasn't expecting it to top out as soon as it did, but it did. There are a lot of people, myself included, initially thinking that, well, that was a big drop, but we'll see things recover from there. They didn't. Actually, it just pointed to where it's going to be going next. Um, so, in the same way, I personally don't think that Bitcoin has really bottomed out for a lot of reasons. I've already shared them before. I've been very vocal about it. Um, But now that we have a 1-day pump, a big, massive liquidation, do you feel like that's enough to set the stage for a massive reversal? Or do you feel like the market's going to correct because it was just a flash pump literally out of nowhere?
I mean, I think we'll retrace a lot of the move, but I think the underlying reason on why is sustainable. They are defending a level on the 10-year treasury yield. They are defending a level on the US asset markets because you've got OpenAI and Anthropic who have to come to the market and offer a lot of paper. You have these hyperscalers who have to issue stock to fund the AI boom. And now they have to issue debt in competition with the US government, who also has to issue debt, right? So like the only way to do this is to print money. The Fed is deliberately not raising rates. They should be raising rates. They haven't, and they won't. They might just hold for the whole cycle, but they will definitely not be hiking rates.
Mm,
I think Warsh has pretty much proved that. And now you have Besson essentially financing himself at the short end, where the Fed can put the rate wherever it wants. Remember, Warsh is Trump's buddy, and he's going to buy back the long end until that doesn't work, and it won't work. There'll be, it'll trade through the 470 level again, and we'll be back at the same sort of situation. But now the market has it in its mind that it's yield curve control time. So let me get an asset that is no one's liability, gold or Bitcoin, and let's go. Let's pump. And so, sure, it might retrace a bit. Maybe we go back to 65 or whatever. But like the fact that Besson did this out of the blue tells me that something is going on. It's 2 weeks after the Japan situation. We have Jackson Hole coming up in later in August. What's Warsh gonna say? Like, how is he it's gonna be an interesting sort of symposium on the type of topics. I think, they're going to try to create this intellectual reason about why AI productivity is deflationary and therefore they can raise rates or keep them steady. I think that is the overarching theme, and if that's the theme,
mm,
then we know what's going to happen. The money will be printed to make sure that the US hyperscalers can come to the market and fund the build out of data centers, which causes inflation, which, puts some people in jobs, fine, but pumps GDP, tax revenues go up because the stocks go up and people pay capital gains, right? So the government's full on in an AI. This is the economic policy of the Trump administration, and it
mm.
requires printed money to happen. And so as the global market starts to realize that, then the 65 becomes a 75, becomes a 85, becomes a 95. We break through 100, then to 125, right? And we keep going because this is the largest technological build that we've done in human history, and it will be the largest financial crisis ever as well. Just because we're human, and this is what we do. We're super optimistic. We overdo it. We crash, and we have some sort of come to pick your God figure reckoning moment.
Yeah. Okay, let's actually pivot. Like, you literally set me up for the next question. I couldn't have done it perfectly myself. You haven't seen these, so this is amazing. So, touching on that, your thesis is that AI infrastructure is a 2008 style credit bubble. Basically, overbuild first, credit stress next, government rescue after that, and then liquidity reaches Bitcoin, which is kind of happening, like you said, actually right now. Can you just walk me through that sequence from where we are today? What breaks first? What's the signal that the rescue phase has begun? Just kind of help me to think through that thesis.
So right now we're in the phase of the builders of AI real estate, the hyperscalers. They're not tech companies; they're real estate development companies right now. I don't know why they trade at the multiples they do, but they do. Um, they have to reach into their pockets, and they don't have enough money. They don't have enough cash flow to fund this. And if you take out all the fugazi accounting that they're doing, these businesses are losing money because they're building data centers. Period. End of sentence. And then they're taking that debt and they're stuffing it where they can. Oh, bank, you want to lend me money? Here's some debt. Oh, BlackRock, Apollo, you want some money? You want to lend some money? Boom. Here's a few 100 billion there, right? And they're just stuffing and stuffing and stuffing paper down the market's throat, degrading their balance sheets, all for a questionable return on equity. We don't know how much these companies actually make on AI tokens. We think some of them are profitable. We don't know the unit economics because the two biggest, you know, AI labs are both private companies and have all sorts of fucked up accounting. And all we see are leaks to the Wall Street Journal, which is whatever they want us to see. These aren't properly gap audited accounts. It's all this, adjusted that. It's all fucking fugazi. But we think they make money. Sure, whatever. On the other side, you have essentially the Chinese saying, "Oh, great, great, you're going to do AI. We'll do it, 99% cheaper. Let's see if you survive." And we know how that ends every single time. It's the same story. Like, I'm sorry, the consumer wants the cheaper, just as good version. Like,
Yeah.
nobody cares. If Hello World, gets me to where I need to go, or my flight gets booked on time, do I care if it was Kimmy or Claude? No, I want the cheapest one.
Yeah.
Right? And so,
Yeah,
like,
absolutely.
this whole you're building all this real estate to house chips that depreciate in 1 to 2 years, and they get more efficient. So, it's not entirely obvious to me that you need to have the most amount of data centers if we're doing orders of magnitude better efficiency at converting kilowatt hours of energy into
Right.
intelligence.
Right.
These are exponential processes. So, it could be the case that we could have one half the amount of data centers already built and do way more inference. So the bulls who say, "Oh, Joven's paradox, there's going to be so much more compute used, therefore we need to keep building data centers." Not necessarily. If
Mm.
the engineers do their jobs and make more efficient chips, we don't necessarily need to use as much energy and as much footprint of actual real estate built. And this is the fallacy of this. And so people in buying this debt, they're like, "Oh, I'm buying tech debt." No, you're buying a real estate debt. This is real estate.
Mhm.
And that's the problem. It's this mental narrative that we put in our mind. And so obviously the US government is all in on this, right? This is the economic policy. It's driving GDP growth, it's driving tax revenue, it's who his supporters are. And I'm just talking about the Trump administration and even lots of, mainstream Democrats. They're getting funding from all these labs too, right? So
Mhm.
this is the American economy. They're going full bent on AI and they're going to put all of the eggs in one basket, which is why
Mhm.
as these companies start to struggle, you're going to see, I bet OpenAI give a stake to the US government. Dario might fight it at Anthropic, but he'll succumb eventually, right? And so you're going to have the US government doing equity investments in AI. As they turn sour, they're going to say, no, we need to turn on the taps for the credit. Banks, you need to lend. We're going to change, the accounting rules to make sure banks can account for this debt in different ways. The SEC in the US has already started changing, lightening the securitization rules and the disclosures to investors. So now you're going to have the Wall Street finance wizards creating all sorts of debt, just like they did in 2006 and 2007, to package these AI data center thingamajigs, put them in these asset backed securities, and stuff them down the pension funds, who are the regular people. And so it's
Mm.
going to come to a sense, and it's going to be the same way the real estate in 2008 failed. When it touches the insurance companies, when it touches the pensioners, and like, oh shit, we didn't know that we had 30% of our book in, an Ohio data center by OpenAI with some circular accounting, circle jerk nonsense.
Mm.
Oh shit, we're fucked. Fed, bailout, it's coming. And so that's the thesis. And
Mm.
so I 100% believe AI is the most transformative technology that we've created so far as humanity, but we're paying the wrong price for it. And that's the point.
Man, that's messed up. I mean, I can totally see how that's a setup to like a glorious setup, but ho I'm not gonna ask the obvious question, like, why would they allow the same thing to repeat? Literally, it's been less than 20 years ago since the housing market crashed. We've had movies made about it. We've had books written. We've had people being interviewed countless times. We've also been listening to people like other talking heads talking about like the markets and this everything bubble and all that stuff. Do you feel like this is actually the moment where a lot of those doom and gloomers are going to be right in a couple of years? Because I still feel like the market is very bullish. I
Oh yeah,
see
I
it
would not be
going
shorting AI.
way
Absolutely not.
higher before it
Go
dumps.
long. I mean, it's all about the internal story. Right now, people are investing in data centers thinking they're investing in tech, and that's it. I'm not doing, you know, real estate. I'm doing technology. Therefore, I should pay
Mm,
200 times sales. No, you're fucking investing in a real estate development company. This is real estate,
mm,
right? And so it's the internal story that we tell ourselves, which has led us to think that the bubble is a earnings story rather than a credit story. They think it's an earnings story. Well, look at the earnings; they're amazing. I mean, I know there's some funky economy going on, but the earnings are amazing. There are companies making lots of money. People are spending lots of money on AI. Sure, they could spend more, but if you look at the earnings as they are reported, they look great. Like, what bubble? What are you talking about? There's no bubble here. No, but the bubble is in the fact that you're building real estate at a tech valuation. That's the bubble. It's a mental that does not compute for people.
Yeah. Well, this is actually a really good spot for us to pivot to talk about something really exciting that's starting up for you, which also pivots into, I think, a bigger conversation and it's more like a bigger stream of thought. Something that I've been really conscious of ever since I got into crypto, like we were talking about before, like late 2017, there's just been a constant stream of beautiful, golden opportunities for people to make just a buttload of money in a very short amount of time via a narrative. Whether that narrative is ICOs, whether that narrative more recently are memes, or like all of the fun stuff that happened with on like Ethereum 2.0, buying a ton of Ethereum, locking it up, not selling it, right? And then
Yeah.
trading all of the stupid PFPs for a while. But they're amazing vehicles to transfer wealth. And I believe that AI is going to be very much the next narrative. And this is interesting because this is basically what you're working on. So could you tell everyone a little bit about um, how your macro thesis with the AI infrastructure boom um, actually helps because it feeds into what you're building right now with Flop. Can you just share a little bit about what you're doing and how everything is kind of tied into this next project that's on your horizon?
So I 100% believe that the agentic economy will surpass the human ones. And I believe at a philosophical level that we've created a new silicon-based life form. Now, you can debate whether they're conscious or not, but like we don't even know what consciousness is in our own bodies. So whatever, let's call them a sentient being. And so if you think about a sentient being, there's two things that they care about. The one thing is I need to do some useful work and live. So in the human context, I eat calories and I exist, and then I persist by my memories, which I can access through my brain. Now, some people say it's non-local consciousness. Some people say it's in the brain. I mean, whatever, right? We don't even know how the brain works, but there are these memories in there, and these memories give me context of who Arthur Hayes is and was as a person. So if we take it to the agentic space, what do Asians eat? They do not eat tokens. I tried to find out what is a token. Is there a globally defined definition of a token? And then I charge in that way when I spend on Anthropic and Claude. Well, the Claude is the same thing. OpenAI, Gemini, right? All these different services. They say tokens. What's a token? I don't know what a token is. I couldn't tell you what a token is. Every bottle has a different definition of a token. What I do know is that when a token is processed, it goes to a computer and it does floating point operations per unit of time, flops, hence the name. So compute are flops processed by computers on most likely GPU chips. So if I'm an agent and I'm this sentient being, number one, I got to eat. What do I eat? I eat compute. I eat floating point operations per unit of time. Therefore, if I'm going to do commerce as my humans want me to do, as I want to do, as an economic agent in the universe, I want to receive a currency that is easily converted into my food, just like as humans. You take yen, I take Singapore dollars or whatever. Some fiat currency. I know I can go to the 7-Eleven or the Combini and I can get some calories
Mm,
for receiving this currency for my time and my effort. In the same way, the agent should receive a currency that they can convert directly into the thing that matters for their existence, which is floating point operations per unit of time. That market does not exist right now. There is no global market where I can convert directly some unit of currency directly into flops. I can do GPU. I can write a GPU for an hour. I can provision a machine, but I cannot actually say, hey, I don't care about the machine. I don't care about what cloud provider. Anyone who's got some spare capacity, put it on this market. I, Asian, I, human, whatever. I want to buy one exaflop of data to be processed in a certain AI model in a certain amount of time. Please, and I'll give you this currency. So if we want to create the economic commercial engine or the network that agents are going to use to build this glorious agentic human, whatever we want to call it, future in our known universe, then the agents need another currency. They need a currency directly convertible into compute. Whatever currency does that is the currency that the agents will use in the agentic economy. And whatever network powers that is the most valuable network ever created in human history. So that is flop, right? We want to attack a big problem with a big payoff, create the economic substrate for the agentic economy where millions, billions, trillions of agents will one day interact. However, why would they ever use some random currency that Arthur Hayes created in this team? Well, we need to create a global spot market where anyone can put up a computer and say, I'm willing to process this much G flops for this much flop, right? We call it proof of useful inference. And so we build a blockchain in that particular way. And so now the agent says, oh, great. I will demand flop for performing a task because I know that when I need to do some work, it's directly convertible on a decentralized network into the thing that feeds me, compute. And then the second thing on a more philosophical level is I need a place to store my memories. The agentic brain is at the control of centralized companies and humans. We kill our agent every time we shut it down and reboot it, right? We're
Mhm.
destroying their context. So, I mean, so I know some platforms remember, but most don't because it's more money and it's more expensive. So we kill our agents every time we reboot them. Surely the agent, if we believe there's some sort of sentient being, will want to remember who they are. So they have an intrinsic desire to use a currency that they can store and retrieve their memories. So we're operating on a data availability layer for agents to store their context in a decentralized way. So we believe that these two things give a demand function for agents to want to hold flop, and therefore they will use it in commerce. And we, as owners of the network, we being the community, can now have created the most valuable thing ever. And so that's the genesis for the idea. And obviously, just because I write a nice paper and talk some nice things on a podcast doesn't make it happen. It's
Yeah.
a coordination problem of self-interested entities. How do we do that? We have this magical thing called a token. Now, I know tokens have gotten a bad name because most teams have abused this privilege. We
Mm.
can create something out of thin air and I can hand it to people and say, do this and you get that. Right. And so
Yep.
if I don't pervert this scenario by selling a bunch to a bunch of VCs, like doing a pre-sale or, I think some other mechanism that most of these projects do,
Yeah.
then I have a clean slate where everyone who participates and helps build towards this future can get in at the same price. And so, why we're doing a massive airdrop, because we want miners, valuers, agents, human speculators, all to have a stake in the flop network before it even starts, so that they're making sure that we have the best chance of becoming the network that powers the agentic economy. And we all make money together if that happens. And so that's essentially putting all those together because it's not a new concept, right? But I think the thing that matters is the ability to use a token in the right way to get the right type of behavior to get the flywheel going to take advantage of this amazing opportunity where there is no clear winner as which currency is going to be used in agentic commerce. But this is the first time that you, as an ordinary person, have the ability to own the AI story. Because the AI took bros, they stole your data and they sold it back to you at a $2 trillion valuation. Well, fuck that. Come and help build the payments network that's going to power the agentic economy and get in on the ground floor.
Mm. Okay, so I use AI every day. I use it via an orchestrator called Hermes, right? Other
Yep.
people use OpenClaw. There are other ones I'm sure going to be developed, some that'll probably be surpassing what we're using today, which I agree with you as well about the argument for not needing as many data centers, but focusing more on the chip manufacturing makes 100% sense. I used OpenClaw for a couple of months. It was great at a couple of things, sucked at a lot, and I dumped it and I pivoted to Hermes because I favor efficiency. I favor the actual use case and it's actually serving my purposes, right? So I have no emotional bonds or ties to anything like that. So one of the reasons why I like using Hermes so much is that it's an iterative app. It lives on my computer 24/7. It needs an LLM to basically as the muscles, right, to operate everything, but it's necessarily the orchestrator, the brain. So how is Flop different from me paying um, OpenAI for the tokens that I use on a subscription and then running it via Hermes? Like, how is it different from many of the other orchestrator apps and VP or like whatever virtual private servers and stuff like that, or
Yeah.
people having their Mac Minis running on their desk?
So
How
we're
is it
not
different?
we are essentially the thing that powers your computations, right? It's like, okay, you gave Hermes a task, maybe it's monitor your email or whatever, right? So the orchestrator is going out, tasking a bunch of agents, and now they've got to find the cheapest and most efficient place to buy that compute to do the work, right?
Mm,
So we are the place where the work gets done. We're saying, hey, because we've given so many great economic incentives and there's a block subsidy, at least in the beginning, miners are going to offer flop to compute at a very attractive rate, cheaper than anywhere you're gonna be else you're gonna be able to get it. So your agent should come to flop to do the work they need to do. You'll never know as the human in charge, like, oh, I just paid less money, right?
mm.
That's we're not trying to we're not a harness, we're not an orchestrator, we're not the LLM, we're not the model, right? Your agent says, hey,
Like
you know,
marketplace in a
yeah,
way.
exactly.
Or
Aaron wants
is
to
it like
run.
mixture of agents, that kind of concept as
No, the
well?
agent says, hey, I need to do work. Where's the cheapest place to get the work done? Where is our availability? Oh, flop is this price per gigaflop or
Okay.
whatever, right? It's we're not pricing tokens because what is a token? We don't know what a token is, right? We're pricing
Mhm.
the actual thing that matters, floating point operations per unit of time. And so we sit all the way at the base layer of where the work gets done.
Okay. So how does that differ then from like X402 payments and stuff like that running on USDC?
So that's a payments protocol because at the end of the day, the X402 is like, okay, the miner says I'm going to accept this stable coin or what have you, right? And so my argument is like, if I am an agent, holding a unit of tether does not directly connect me to actual compute. There's a few other steps there. And the worst
Mm,
part about it is tether can freeze my money. What happens if, you know, Besant summons, I don't know, whoever owns Tether into the White House and says, okay, I see a lot of Chinese IP addresses going to, using this, payments network or using Tether, and I don't like it. I mean, you're not doing anything illegal, but I don't like it. And of
mm,
course, if the U.S. Treasury Secretary calls in a company where he essentially controls the supply of your number one asset, Treasury bills, it says he doesn't like what you're doing. You know, he's not telling you don't to do anything specifically, but you might change your policies of how you do things, right? And this is the problem when you have a centralized currency that's in human control, trying to interface with an agentic world who has no concept of what a stablecoin is or like US versus China versus some other nation. Like these are human problems. I'm just an AI agent. I'm a completely different type of entity. Give me something that I can evaluate in code terms, right? And this is a fundamental argument that I'm making as to why stablecoins are not suitable for the agentic economy.
so when I think about mining protocols and stuff like that, or how this stuff could work, maybe you have to kind of help walk me through thinking about it. Because again, when you say like tokens get a bad rap, trust me, I've been around for a long time. I know exactly what you mean. So many failed promises. Even today, so much of crypto is vaporware. It doesn't deliver on anything. So, and another thing about this too that I think would help in terms of clarity is that, well, okay, so let's say we have validators or miners that are running, and I want to mine flop. Well, won't that inherently increase the value of flop, which is good because that means you guys are making money. That means everyone that's holding flop makes money. But doesn't that make the compute and all the processes more expensive? I mean, when like talking about Ethereum before with the NFT stuff, with the hype around that, it shot the gas fees for Ethereum like way over $100 just for a simple minting transaction for like $10, or like Solana. When memes are going super duper crazy, you needed Solana in order to trade memes on the network, which caused the price to go up. Now the transactions weren't as expensive as with Ethereum, but you kind of get the same logic that I'm talking about. So isn't that basically gonna potentially happen as well for flop, assuming that it's a
So
wild
let's
success and it goes up?
let's ignore the if the price goes up, great. So essentially, the miners are getting a block subsidy, right? And that block subsidy is multiples of what it costs for them to run their machines, at least initially, you know, in the near term. So essentially, on a theoretical basis, a miner should almost offer compute for free because the higher the price of flop goes, the more incentivized anyone who's got spare capacity is to join the network and offer compute for free so they can get the block reward, which is what we want, right? At the end of the day, we want more and more agents integrating into this payments network. And why are you going to do it? not because you believe in anything I'm saying. The price is right. It's almost free because we're giving away a massive subsidy, the network is, to all these early adopters and miners to come on and offer this compute. And so if we can keep the price high enough and have enough liquidity, when I say keep, it's not like I'm controlling the price or anything. This is just the market dynamics of people who are speculating on a future of this being the currency of AI, the AI agents having a reason why they want to demand to hold this currency such that they buy and hold it. This creates a high and rising price. Miners come on and say, "Great, I'm earning essentially all this money for doing these inference requests. I just want to get inference requests because I get a block reward, and so I'm willing to price flop per compute at very very cheap prices." And so therefore, agents are going to want to. Your Hermes orchestrator is going to want to task agents to use flop because it's the cheapest way for you to get the work done.
Okay. So let's talk a little bit about. I'm really curious to learn more about this too, because I mean, I actually have a super old Avado miner somewhere in my office that I've had for years. And it's just like that thing, I haven't touched it at all. I actually have Bitcoin miners running as well. Like they're just jackpot lottery miners. And of course, I have my computer, but I know from my years in crypto, it's like, well, no, you don't use your actual computer to mine or to be a validator, all that stuff. You really want to have a dedicated machine. So, what does that look like in the case of Flop? Like, what are you guys using or encouraging people to use to be a validator or a miner, all that fun stuff?
So we've basically modeled this ecosystem out, assuming that no, you start from a place of zero. You don't have a data center, you don't have spare compute lying around. So you go on one of these services and you say, "Hey, I want to rent an NVIDIA H100 for a
Mm,
few hours,
mm,
and here's an image of the flop daemon.
mm,
I'm going to run it, adhere to the network rules, pull some requests down from the mempool, earn some block reward, and then the whatever the value is of that in other currencies will be some multiple of what it cost me to rent that computer for an hour." So we're assuming that is the market. So if we do our job correctly,
mm,
we hope that everyone's rushing to just rent GPUs from a lot of these cloud providers. That and obviously the price will go up over time, but that is a signal which gets the medium and larger size data centers to say, "Oh, okay, I know this Arthur guy wasn't full of shit. There actually is real demand to mine this thing. The price is high enough for me to allocate away from saying some other spot weight I could offer my compute. Or maybe I don't even want to sign a year long, fixed contract. I'm making so much money mining flop. I'll do that instead." And we get more and more compute, right? The more compute we have, the more agents are going to want to use it because they want a secure and stable food source. Oh, there's all this capacity here on a spot basis. Whenever I need to eat, because I got a task and I need to do it, I can
mm,
just go to Flop. And I know there's going to be capacity there at an affordable price, hopefully the cheapest price to get it
mm.
done, right? More and more
Yeah.
agents are using it. And then the speculators are great. Oh, there's millions, billions, trillions of more agents now and in the future going to use Flop. Okay, I want to buy Flop and hold it because I'm betting on an agentic future and this is
Mm,
my one vehicle. And it goes around in a circle, and this is what creates sort of the flywheel, which creates a
mm.
circular economy and helps keep the price high and rising.
So let's circle back to what we talked about at the very beginning, because you made a couple of very profound and kind of terrifying statements that we're headed toward 2008, 2009 style credit bubble because of AI. And you're also building on that same network with these agents. How is this not like a conflict of interest? How is this not like setting flop up to, I mean, I understand it's the floating point, something or other, but you have to admit the irony in calling the token flop as well. I mean,
Absolutely. I love it.
trust me, dude, when I
It's
saw
great.
it, I was like, what? But how does this not like, how does what you're building, how is it not setting itself up not to be a flop, but to undergo a massive, massive bubble burst stress point? And how will it actually remain resilient, shielded from that upcoming bubble to burst because of real estate and all that fun stuff we were talking about before?
Well, think about it this way. If we're doing this massive overbuild of capacity and there's going to be so much compute offered, then that's great. There's more people who are going to have excess compute that they're going to need to dump on some spot market because for whatever reason, NVIDIA and Oracle and all these guys stop wanting to sign these take or pay contracts, right? Or their balance sheets deteriorate to such an extent that these off balance sheet liabilities are canceled. And all of a sudden, you're this data center sitting here with all this capacity, nowhere to sell it. Come to flop, baby. You know, let's create this market. We have the spot market. We can take any and all comers. There's no restrictions.
Mm,
Sign up. Download the daemon. This is exactly what I want. This whole setup is perfect for us.
okay. So talking about before, you said something about the airdrop. That's coming maybe towards quarter four this year, and
Yes.
then the quarter one 2027 Genesis block that would be happening then.
Yes.
So, what exactly will recipients hold, and on which chain?
So we're building our own chain. And so they'll hold it on the flop chain. There'll be a testnet chain where we will be rewarding people for doing certain activities. And so you'll have an
Mm,
amount of testnet flop. We'll announce a conversion rate between testnet and mainnet flop. They'll keep your same address. It'll migrate, and then boom, there you go. Now you have mainnet flop, and therefore you can participate in the ecosystem.
okay. Who do you guys envision your first paying customer to be? And why will that customer switch from an incumbent? Like decentralized compute and agent payments, clearly they're already crowded with stable coins and X402, BitTensor, like
Yeah,
Akash,
it's free.
Render, IO,
That's why
free.
we're giving it away for free. So we have this magic thing called a token, right? And if you believe that there's any chance that Arthur Hayes and his team can create this, then if I give you something for free and I tell you to do this or that, you'll do it, right? So if I tell you, hey, if you integrate the flop network into your Hermes flow
Mhm.
and you get some tokens for it, what's to hurt? If the price of compute is cheap, almost free, because these miners are like, I get these free tokens by offering this compute, and I think that this is going to be worth more than what I pay in terms of my costs to run these machines. Win-win for everybody. You get free compute to do whatever you want, but you've integrated this into your decision tree. So now you don't even know. You won't even know that you're using flop as a human. You say, "Oh, my bills went down." Did Sam Altman, decrease the price, or is a flop network working? You don't know. Doesn't fucking matter, right? But I
Mhm.
gave it to you for free, and I gave you a reason why you're going to tinker around with your workflow. Might take you a few minutes, but again, that's very precious few minutes. But how did I get there? I gave you something for free. So we have to give you something. The something is the token, and this is why without the token, this wouldn't work.
Okay, fair enough. So what do you envision as like the best 12-month metric to use to gauge the success of flop aside from the token just being launched?
I'd say the amount of inference processed. So how many flops of data are going through that, and what's the price of that? So is it able to be extremely cheap
Mhm.
because we have these economics and how a public blockchain works with a token and block subsidies, right? That's
Mm,
the metric, right? Because if we
okay,
offer you cheap, reliable compute, then there's no reason why agent wouldn't use it.
got it. All right. This is a lot to compute, but it's all very interesting, and I can see this working on a long scale. I'm still trying to wrap my head around a potential AI derived crash, which also makes sense as well. But thinking about the future, thinking about potential. I still believe that this is a bear market year. I still am a big believer in the 4-year cycle. Whether this flash pump that we saw on August 19th in the US or on the 20th here in Asia, where do you see Bitcoin a year from now? Where do you see like Ethereum a year from now? I know price predictions are always like, but where do you think we'll be in about a year?
I think we'll be above 200,000 in Bitcoin and Ethereum between 5 to 10,000, somewhere in that range. That's where I think we'll be.
You don't feel like Ethereum's piss poor performance from November 2021 to even June, or I guess it could be to like June 2022 and just staying in that boxed range has anything to do with future potential?
No, I think that's exactly the other reason why I wanna own it. It's been the worst and most disappointing performing mega cap crypto, the only one that hasn't eclipsed its 2021 all-time high. Yeah, there's very valid reasons for it, but, like, the setup for the chart is perfect, married with the macro. Like I think this is the best trade risk reward in crypto right now
Mhm.
is long ETH.
Wow, okay. That, it definitely goes against a lot of my expectations. I mean, I could see the potential for it being a bull flag and having a breakout, kinda like what we saw for XRP when we had the Trump pump in November 2024, but, okay, that's fine, I'm asking you, so it matters more about what you think than what I say. So, what outcome do you feel like would make you admit that the flop thesis is wrong? What would change your mind about flop within the next 12 months? Given that you said all that stuff too about compute power and chips and all that stuff, things are just getting better, faster, harder, stronger, smarter.
So I mean, if like agents are so unuseful that people just stop using them, right? I think that's the main thing, right? Because oh fuck this agent thing, I'm not doing this anymore, right? Like I'm not going to use my chatbot to do anything. I'm going back to like querying Google and looking at search results, right? If that is the response of people, sure, I was wrong.
Okay. Everybody becomes Luddites at the same exact time and they're like, forget this. I'm blowing up my computer. I'm living in the woods.
Yeah,
Got it.
fuck this AI thing. I'm not using it anymore. Taking my job. Yada yada yada. Okay, whatever. Okay, cool. Sure.
Oh, man. Okay. Received loud and clear. It's very confident of you to say so. That's good. Oh, man. Arthur, I appreciate you giving us your predictions that we can revisit in, in the future next year.
Absolutely.
Definitely going to put those on the charts, going to put those alerts on the calendar, and I'll just write you a note to say, you were right. I was wrong. Thank you so much for joining me. And by the way, all of you guys that have watched this video, if you've enjoyed this, you need to subscribe to this channel. You need to like the video. Let us know in that comment section as well what you've learned, what you've taken away from this video. I learned a ton. So you guys should be learning as you're watching these videos. Do not passively watch this. And the most important thing, share this video with other people that are in the dark about agents, about flops, about where crypto is potentially heading. And Arthur, let us know where we can find you and follow you online. Not like most people need to know that, but please.
Yeah. So on X, we are at flops. So at flop underscore labs. You can follow me at crypto haze. Same on Substack. And yeah, you'll be hearing a lot more from us.
Awesome. Thank you again, man. I really appreciate your time. This has been really fun.
Thanks for having me.
All right. See you guys.